And I still think silver is cheap. I think silver could easily be $100 next year. Do I think gold is going to be 8,000 next year? I mean, probably not. It could be. It could be. But I think if gold is 8,000 next year, silver will be more than 100. Silver might be 150.
So
at its peak, it was over 100 to 1. So you were able to get more than 100 ounces of silver for 1 ounce of gold. Now it's about 80 to 1. And that's still cheap silver. I think my minimum target would be about 50 to 1. That would be a minimum. But I think there's a good shot that we could go to 20 to 1.
Peter Schiff says the real crash hasn't even started yet. What we saw in 2008 was just the tremor before the quake, a warning that the entire debt-based system was unsustainable. This time, he says, the next phase won't just be a financial crisis, it'll be a full-blown dollar crisis. Years of zero interest rates, endless stimulus, and reckless borrowing have finally caught up. The can that policymakers kept kicking down the road has become too heavy to move. Schiff points out that back in 2008, he predicted gold would hit $5,000. Given how much worse the fundamentals are today, he now believes $20,000 gold isn't unrealistic. The metal's recent rally isn't just market noise. It's a signal that faith in the dollar is cracking. Central banks know it too. They're quietly selling dollars and loading up on gold, shifting reserves out of paper promises and into tangible money. He argues that if gold around $400 once reflected loose monetary policy, then gold above $4,000 shows how far things have deteriorated. The Fed is already too easy, yet it's still preparing to cut rates, the exact wrong move. Schiff says that combination points straight toward a bond market collapse, a plunging dollar, and an explosive rise in precious metals. And while gold will lead, he believes silver will outperform. The gold-to-silver ratio, sitting near 80 to 1, is historically stretched. In a true bull run, he expects it to tighten to 50 to 1, or even 20 to 1 at the top. When that happens, he says, silver will become the trade of the decade. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
But I actually think that we could have the crisis next year. And I'm not talking about the financial crisis, right? We had that in '08, and I totally predicted that crisis. I wrote about it in my book, Crash Proof. But what I was worried about was not that crisis, but the next one that hasn't come yet because we've kicked the can down the road, for all these years. But all that can kicking allowed all the problems to get much worse. And so now, when I was talking about $5,000 gold back then, I mean, $5,000 gold could be this year. I mean, very easily. But I mean, at a minimum now, probably we're looking at $20,000 gold because of all of the money that has been printed and all the money that's going to be printed, which is why, people have to, look at what's happening and protect themselves. A lot of people, I think, are going to get wiped out in this dollar crisis, which I think gold is signaling a dollar crisis. Just like, when subprime blew up, and I was short that market, but when subprime blew up in '07, that signaled the financial crisis was coming in '08. Yet the mainstream media, the Federal Reserve, were oblivious to it. I remember those days when they still had me on, CNBC and Bloomberg and CNN and Fox, and I was warning about it. People were laughing it off, and even though there was a clear sign that it was coming. Well, what's happening now in gold? In fact, Scott Bessent, I was listening to him interviewed a couple hours ago, and he was asked if he's concerned about the price of gold going up. But he said, absolutely not. It means nothing. Who cares? Everything is great. It doesn't mean nothing. It means everything. It is the most important commodity in economics, in money. Gold is money. And the fact that central banks around the world have been selling their dollars and buying gold means something, right? This signal, even Alan Greenspan, Bessent talked about, how great Alan Greenspan was, and, which, I didn't think he did a good job. He caused the financial crisis. But one thing that Greenspan got right is he said that he uses gold as a barometer of whether or not his monetary policy is too easy or too tight. He said if gold gets close to 400, that means I'm too loose. And if it goes near 300, I'm too tight. Of course, at the time he said that, it was around 350. But, what does $4,000 gold tell you, or 4,200? The Fed is too loose, yet it's about to cut rates. So gold's going through the roof here. That means the dollar's going through the floor. We're going to have a bond crisis. And I still think silver's cheap. I think silver could easily be $100 next year. Do I think gold is going to be 8,000 next year? I mean, probably not. It could be. But I think if gold is 8,000 next year, silver will be more than 100. Silver might be 150. So, at its peak, it was over 100 to 1. So you were able to get more than 100 ounces of silver for 1 ounce of gold. Now it's about 80 to 1. And that's still cheap silver. Mm-hmm. I think my minimum would be about 50 to 1. That would be a minimum. But I think there's a good shot that we could go to 20 to 1. Maybe even a little lower.
Maybe 15. 15.
Yeah, I mean, look,
hit it before.
Whenever the peak of this bull market is, and I think we're still many, many years away from a peak, but wherever the peak is, that's when silver is going to be at its most expensive relative to gold, right? So it's going to happen. It's just a question of when. I think the main reason, and I've been saying this, that gold has been going up and not silver is because this rally has been driven by central banks. They don't buy silver. They don't have any place to store it. They buy gold. Exactly. The retail investor wasn't buying. That's just starting now, just now. Wall Street is now, for the first time in my career, right? I've been in the financial business for over 35 years.
Peter Schiff shifts to the bigger picture. The U.S. economy is living in a bubble. He argues that the trade deficit isn't proof the world is exploiting America. It's proof that America has been exploiting the world. The U.S. has been printing dollars, borrowing heavily, and buying goods it doesn't produce. That's ending. He says China isn't being hurt by the trade war, it's being freed from it. As China trades more with the rest of the world and less with the U.S., its economy strengthens while America's weakens. This global shift, what he calls decoupling and de-dollarization, marks the end of America's ability to live beyond its means. Gold is signaling that change. But just like in 2007, when people ignored the warning signs in subprime mortgages, he believes investors and policymakers are missing what gold's rise is really telling them. The dollar and the bond market are both on the verge of collapsing. He also points out that the public still isn't taking gold seriously. His company, Schiff Gold, isn't flooded with buyers. Even though prices are climbing, most people are still hesitant to buy, thinking it's too expensive. Some are even selling. Let's get back to the interview.
And meanwhile, they're missing out on what's going on in gold stocks. Foreign stocks are killing it. We're having our best year since I've been managing money. Even our basic strategies, our dividend-paying foreign stock strategy is almost up 50% on the year. And we still have a couple of months left. But of course, our biggest strategies are gold and mining stocks. And, there we've more than doubled.
Crushing it.
But, the big new, the small ones, the junior miners, like my gold fund has about a third in real small companies, juniors, and they haven't even moved that much this year. I think they're the story for 2026, but that's a great opportunity for people to get into my gold fund, which people can buy no load, any discount broker, EPGIX. Yeah, it's more than double this year, but that's nothing compared to, I think, what's going to happen when these smaller stocks that have underperformed this year, when they kick in, because there's so much leverage baked into those stocks. Well, the media doesn't understand it. I mean, they're not going to cover what they don't understand. We've been living in a bubble. Look, the Trump administration has it backwards. They think that the trade deficits mean that the world's been screwing us over. The reality is we've been screwing over the world. You hear Trump talk about, China's economy is going to be wrecked from this trade war. No, they're going to be liberated from the trade war. Liberation Day liberated the Chinese. It's the American economy that's going to get wrecked. The best thing that China can do is stop vendor financing the deadbeat American customer. And Chinese economy is actually strengthening quite a bit as they're trading less with America and more with the rest of the world. This decoupling is happening alongside the de-dollarization. And that means America's ride on the global gravy train is coming to an end. We're not going to be able to live beyond our means anymore. We just can't crank dollars off a printing press and then go on a shopping spree around the world and buy all kinds of stuff that we don't produce. We're not going to be able to get leveraged as consumers and borrow money and buy stuff that we can't afford. Those days are coming to an end. That's what gold is telling you. But the mainstream media, the Fed, they don't get it, right? Just like they didn't understand the problems in the mortgage market, even though subprime blew up, they don't understand the significance of what's happening in gold and what it means. Yes, the dollar relative to other fiat currencies hasn't collapsed yet, but it's about to. The bond market hasn't collapsed yet, but it's about to. Because when subprime crashed and everybody said, oh, don't worry about it, it's just subprime, and I knew it was the tip of an iceberg. This is the tip of an even bigger iceberg when you see this happening to the price of gold and the price of silver. And, people are oblivious. People, they look at gold and they think, oh, it's a bubble. No, nobody's invested. I got Schiff Gold as my gold company, and business has been slow for years. It's picked up a little bit in the last month or so, but it's nothing to write home about. It's not like the phones are ringing off the hook. I mean, it's not even near what it was during COVID. That was the best year I ever had in the gold business was 2020 because people were actually worried and they rushed out to buy gold and silver. There is no real worry now. In fact, what we've found over the last year until very recently is people were reluctant to buy gold and silver because they thought the price was too high. And in fact, what was keeping us going was people were calling up to sell their gold and silver. They wanted to cash out, right? And now, of course, that I advise not to do that. I've been telling people, no, don't. The last thing you want to do is sell your gold and silver. I read this ridiculous article in the Financial Times where they said that central banks should take advantage of the gold bubble and sell their gold. I mean, they're the ones that are buying. The last thing they're going to do is sell.
Every cycle has its warnings, and this one is screaming louder than most. The U.S. economy is sitting on layers of debt that can't be inflated away forever, and the cracks are starting to show. Peter Schiff's argument isn't just about gold prices or yield curves. It's about the endgame of a system that's been built on borrowing and denial. The illusion of strength in the dollar has been propped up by faith, not fundamentals. When that faith breaks, the fallout won't look like 2008. It'll be deeper and more structural. The bond market will wobble under its own weight. The dollar will lose its privilege, and real assets will rise to reclaim their place as money that can't be printed. Gold's rally is already whispering that message, but it's silver that could shout it. When monetary panic turns into a scramble for tangible value, silver's leverage on gold tends to turn quiet moves into surges. What this moment may truly represent isn't another correction or currency cycle, but the passing of an era from credit-driven prosperity to value-backed survival. The question now is whether investors will recognize that turning point in time or wait until the market forces them to. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.